Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with the euro-dollar pair with Paulo Greco. The EURUSD currency pair continued trading sideways throughout Friday. In the second half of the last week, the euro traded exclusively between the levels of 1.1321 and 1391. Although the overall sideways channel could be outlined between 1.1274 and 1457. There's no point in reviewing Friday's macroeconomic background. The market continues to ignore almost all reports. Last week, the most important report on US durable goods orders showed a 9% increase, but the dollar did not react. As shown in the chart above, the net position of non-commercial traders remained bullish for a long time. The bears barely managed to move into dominance but quickly lost it. Since Trump took office as US president, the dollar has fallen into an abuse. We cannot definitely say that the decline of the American currency will continue, and the COT reports reflect the true sentiment of major players, which can also change very quickly in the current circumstances. We still do not see any fundamental factors for strengthening the European currency, but one very significant factor remains for the fall of the US dollar. The pair may correct for a few more weeks or months, but a 16-year downtrend won't be reversed so quickly. On the hourly timeframe, the EURUSD pair maintains an upward trend but has been trading flat for the past few weeks due to the absence of news on Trump's trade issues. It can officially be declared on the daily timeframe that the downtrend has been cancelled. This would never have happened if Trump had not started a trade war with the entire world. For April 28, we highlight the following levels for trading: 1.1234, 1.1274, 1.1321, 1.1391, and 1.1457. No significant events or reports are scheduled in the European Union or the United States for Monday, but it should be remembered that Trump can still provoke a new storm with his decisions. Even a simple statement from the US president could trigger a strong market movement, as we observed at the last week's beginning. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Dimitrios Tsoupas. Last week, the bulls updated historical highs and formed a new maximum extremum at 34.99.58. Afterward, gold entered a downward correction towards the support of the daily short-term trend at 3346.45. The market has taken a pause. If bearish sentiment receives a new impulse for development, the next target will be the daily medium-term trend at 3227.79. And then the corrective decline might extend toward the support of the weekly short-term trend at 3164.81. Eliminating the daily golden cross at 3163.64 and consolidating below the weekly levels 3164 and 3131 would open up new bearish prospects. On the lower timeframes, the main advantage remains with the bears. The market is operating below the key levels, currently at 34.45, the daily central pivot level, and 33.56.56, the weekly long-term trend. Consolidation above the trend line and its reversal could shift the current balance of forces in favor of further bullish recovery. Resistance levels will be important for the bulls. If the market starts developing directed moves, and support levels will be important for the bears. According to the classic pivot points, pivot levels are updated daily, and new actual data will appear at the opening of trading. That's all for today. Wish you best of luck.